This is Colin Cattell with Palisade Radio. Here on the line we have returning guest Jordan Roy Byrne of the Daily Gold. Thanks for joining us.
Thanks for having me, Colin.
Jordan, I have to give you some credit because you're one of the best technical analysts out there today. You have the gumption to come out and make difficult calls and are never scared to admit when you're off on the timing. And a few weeks ago you told me you'd like to come back on the show here at Palisade Radio and make a strong call to our listeners. Are you ready to make that call?
Yes, I am, Colin. Back when we were talking, I was really looking for a final plunge in the precious metals complex, and we didn't get that. I mean, you go back to December, looking at the stocks. I mean, they had several opportunities to make that final plunge lower that I was looking for, and that didn't happen. And, looking at a lot of my favorite stocks, most of them bottomed in June and didn't make new lows in December, like we saw with GDX and GDXJ. So with respect to the stocks, I do think we've made the final bottom, and I strongly believe that to be the case with GDXJ. One thing with GDXJ, I mean, that market has been in a bear market since the beginning of April 2011. So that's been like in a 32 or 33 month bear market, almost a 3-year bear market in terms of time. And then the price at its bottom was down 82%. So, I mean, with that kind of oversold condition, you're already on the cusp of a major bottom. Secondly, you look at the price action in December where the market made a new low and then was really ripe for kind of that final plunge, and it didn't happen. So that tells you something. And then third, I know you've seen this chart, Colin, but when I call it my bear market analogs chart, and that's for the gold stocks. And when I line up the current bear market with all the other bear markets, I mean, we are looking at that chart. I mean, you have to see it, of course, but in terms of price and time, I mean, looking at this bear market compared to history, it's really, really difficult to think that this bear market is not over. I mean, if I was going to make a case and say, and this is with respect to the large cap stocks, if I was going to make a case and say the large cap stocks, GDX or HUI is going to make a new low, it would make a new low, and then that would be the end of the bear market. And so with respect to GDXJ, the juniors, they peaked before the large cap stocks. They've been going down for longer. They've gone down much further. The sell-off has been a lot more dramatic. And these are the types of companies who are less, of course, every company is affected by the metals prices, but these are the types of companies that are not 100% correlated to the metals. In other words, if we would see the metals make new lows, I think that would hurt the large caps more than the juniors. And so that's why, I mean, with respect to calling a bottom here, I believe it's in for the stocks. I strongly believe that to be the case with the juniors and GDXJ and kind of the larger, more established juniors. So that's really what I'm looking at. With respect to the metals, I'm not sure. I'm less convinced about the metals. Remember, in the 2000 to 2001 bottom, the stocks bottomed in, I believe, we had the XAU made a double bottom in October, November. The Huey bottomed in November, and then gold didn't even bottom until I believe it was February or April. And then silver bottomed after that. So you can have a staggered bottom. And I just think looking at the bear market we've had in the correction, it's going to be more similar to 2000 than the 2008 correction where we basically had a panic crash. Everything bottomed all at once. So, given that, to kind of repeat what I've already said, I believe we've seen a bottom in the stocks. I strongly believe that to be the case with the GDXJ, the juniors and the larger juniors. And with the metals, I'm not entirely convinced. I think there's a chance they can make a new low at some point in the next couple months, but I do believe the bottom is definitely in for GDXJ and most likely for the large cap stocks. I just can't see them breaking to new lows from here.
Okay, in the past couple weeks, negative sentiment reached a decade's high at the same time as tax loss selling season, and this is something you pointed out on thedailygold.com in one of your featured articles. Yet at the same time, the miners held in, and we didn't make new lows. For months, you were calling for a final washout before the bull market resumes. It looks like that might have already occurred back in June. So from what you've just said, I guess we're now looking at a double bottom, yes?
Are you talking about the stocks or the metals?
The stocks.
Yeah, well, with the stocks, with looking at GDX and GDXJ, we kind of made a little double bottom in December, and the strength that we've had since around Christmas. I mean, today we're pulling back, but the strength we've had since then confirms that some kind of a bottom is in for the stocks. And yeah, I mean that's one of the reasons why I am very bullish in regards to the final bottom being in, because December was really ripe for tax loss selling, and we just didn't make a new low, especially when we really thought we were going to have a final plunge. I mean, looking at GDX and GDXJ, the market broke down to new lows. So the market in December was trading in a territory where it really should have kept going down. It wasn't like it was sitting at support and then it was able to rebound from there. I mean, the market broke down and it was kind of in no man's land with respect to support, and then had this good reversal. I mean, I wish the reversal would have been faster and stronger. It would have made it easier to call a final bottom. I mean, I'm kind of nitpicking there, but it just we were in no man's land. We were in a point that was ripe for tax loss selling, and we didn't get that. And sentiment is super bullish, and many people are still saying, oh, maybe gold could go to 900 or 1,000, and we need the final wash. I mean, too many people are saying that. I was saying that in December. And I think we have to take notice of that price action and what has happened.
Just a correction to what you just said. I believe you meant correct. Sentiment was extremely bearish, not bullish.
Right, right.
Okay.
Yeah, thanks. I'm sorry about that.
The other day you released a great interview with Tiho Burkan, and I urge all our listeners to go to your website. Every time you release an interview with him, it's filled with great information. Tiho contends we'll likely see further downside in gold, which you've concurred might happen. You've held firm, though, that the stocks have probably seen a bottom, and you stated that bear markets are a function of price and time. Can you quickly touch on what you mean and how this relates to the current situation?
Well, bear markets and corrections are a function of price and time, and so what that means is there's a price component and a time component that the market corrects, and sometimes we get very very big, swift, quick, fast corrections down moves in a correction or a bear market. That's what we had in 2008. I mean, the gold stocks peaked in early 2008, the large gold stocks. Then they had like a 6 or 7 month downturn, but it was very fast. So that was a strong correction in terms of price, but very limited in terms of time. Now, what we've had in this bear market, it's been relatively strong as far as the price decline, and very strong as far as time. I mean, it's been a very severe correction, but if you just go back in history and you look at the corrections that gold and silver have had in the bear markets, the most severe bear markets in terms of price are going to be shorter in terms of time, whereas the ones that are less severe in terms of price tend to last longer in terms of time. And so we're already, I mean, this is uh, with respect to the metals, this is a fairly long bear market, and the price decline has been sizable, and so looking at these two components and looking at history, uh, the stronger corrections in terms of time and looking for that final plunge, it's more likely to happen sooner rather than later. I don't, in other words, I can't really see the metals kind of consolidating for 5 or 6 months and then they have a final plunge. The longer you get, the less I mean, the longer a correction or a bear market is, the less likely you're going to get that final plunge.
If a bottom is indeed in at this point, what do you expect looking towards the future in terms of the price action for gold stocks? Are we looking at a violent move upward or a steady climb into the next leg of the bull market?
It's a difficult question to answer. We now looking out, let's say the bottom is in for the stock. So I've already said that. So that means that, 6 to 9 months from now, we should see very excellent performance. I'm not quite sure what shape that is going to take because for example, if the market plunged to new lows, it plunged to final lows, we would get a very strong and aggressive rebound. So it would happen the gains would happen more quickly. Now, looking at the metals, where they are right now, they're not, they didn't make that final plunge, so they're not as oversold kind of in the shorter medium term. So in that scenario, you get a more steady recovery. You don't get like a violent type of rebound. And so looking at GDX and GDXJ, they kind of put in a little double bottom in December. We've had a good rally. Maybe they come back down in February and form an even stronger base. Um, if that were to happen, then we could expect stronger gains perhaps in the spring and summer. It's just difficult to say. I mean, I guess I'll just repeat myself. If you plunge to a new low, uh, then you're more likely to get a violent rebound very quickly. If we kind of slowly base over the next couple months, then the rebound will be more steady. And then when you come out of that base for good, that's when you'll see the strong gains. But I mean, to complete my answer, predicting what's going to happen over the next 2, 3, 4 months, it's very difficult as far as the rebound. But studying history and studying these rebounds, looking 6 to 9 months out, we should see very strong gains from the point where the bottom has been made. So, I mean, if we've bottomed here in GDXJ 6 to 9 months out, we should be at least 50% higher from where the bottom is.
Tapping into your technical expertise, does the TSXV, the venture exchange crossing above the 200-day moving average, hold any significance? And I'll point out this is the first time this has happened in around 3 years now.
Yeah, I mean, I would say definitely. Just looking at the move we've had in the venture, I just pulled that up. I mean, in June, it made a low at 859, and then December, a higher low at 883. It's ran all the way up to 968. Looking at that, I think the bottom is definitely in. I mean, I know it depends on who you talk to. Some people say the juniors are only the venture exchange. Some people refer to GDXJ as the juniors. But looking at the CDNX, yeah, that's definitely positive. I mean, that's been basing essentially since last April when we had that crash in gold. I mean, it's very interesting because the low in April was at about 918. We're at 968 right now. The low in April in gold, I believe, was in the mid 1300s, and so we're trading below that as far as gold. So these juniors, the real penny type of juniors, I mean, I think they've definitely bottomed. I mean, they just got extremely oversold. They got crushed, and they just got less oversold, and now we're seeing more buying come in. And so yeah, I mean, going back to what you said, the 200-day moving average, that is still sloping down, but it looks like it's going to start to turn up soon. With moving averages, the key is really what direction is it sloping in. So we've gotten above, we're far above the moving average right now. It looks like it's going to start turning up, and in the next couple months, that's what we have to watch for to see if the CDNX will hold above the moving average as it starts turning up. And if it does hold above that, then you're in a new bull market cycle. So it going above it right now, it is significant. That's half the equation. The other half is let's see if it stays above that moving average as it starts turning up.
Final question for you. If the bear market is not over yet in gold stocks, could you impress upon our listeners the benefit of such a scenario in terms of every day that the fundamentals grow stronger and the longer a bear market lasts, and the more people that give up, the upside potential and rebound for each person left continues to improve, does it not?
Absolutely, absolutely. I mean, as I said in my first answer, a couple things. First, I think a lot of stocks already bottomed in June, and that's what happens when you get a market bottom. I mean, remember the S&P 500 bottomed in March, but a lot of stocks in some sectors bottomed in October. So depending on which stocks you own, if the market makes a final low, that doesn't mean every stock you have in your portfolio is going to make a final low. Maybe none of the ones that you own make a final low. But like I said, first of all, if we make a final low in the next couple of months, that's just going to produce a much bigger and much more violent rebound. And secondly, um, you mentioned T Ho, and I remember talking to him a year or 2 years ago, and he was saying, we need the dollar to have a rally. We need gold to have a big correction at some point because that is what's needed to produce that parabolic move that we saw in the late 70s. We need a big flush out. We need a big clean out because that's going to pave the way for sentiment and people to think the bull market is over and all the weak hands are going to sell out, and that's what's going to set the table for a much stronger bull market that will evolve into that parabolic move. So yeah, I mean, the further things go down, the more they can come up. I mean, it sounds too simple, but it's really true. I mean, the further a bear market goes down, the more violent and the bigger the rally that you'll have in percentage terms. And like I said, I mean, that even if we make a new low, that doesn't mean that every stock you own is going to make a new low. I mean, there's a lot of charts out there of stocks that are just not going to make new lows. I mean, we don't have to go through all of them, but let me just give you a quick example. Franco-Nevada hit a bottom of $31 in late June. It's trading at $42 right now. I mean, does anyone seriously think that thing is going to go to a new low? I mean, I know I'll look really silly if it does go to a new low, but I mean, that thing made a new low quite a long time ago. We're so deep in this bear market. I just don't see how that stock trading at $42 right now is going to fall below $31. And it's kind of a leading indicator of sorts for the mining stock sector. And this is similar to what happened with the stock market after the bottom in 2009. I mean, there were many stocks that were extremely oversold, and they had huge rebounds, in the first 3 or 6 months after that bottom. And there were still, strategists and perma bears who were saying, "Oh, the market's going to make a new low. This is just a bear market rally." But just if you look at the amount that many stocks were rallying, when something rallies 50 or 60 or 70 or 100% at this point in time, it's just not going to make a new low. It's just you realistically have to ask yourself that question, and that's why looking at if you're predicting a new low for the market or for the precious metal sector, there's many stocks out there that just look like they're not going to make new lows. So I guess what I meant to say is if you're predicting a new low, you really have to contend with that. And Franco-Nevada would just be my best example. I don't see, that thing, what is it, almost up 40% since its bottom. It's a very large liquid stock. I mean, how is that thing going to fall another 30 or 40% from here? I just don't see it happening.
Well, Jordan, thanks so much for your insights on the market. We'll be sure to get you back on the program as soon as Franco-Nevada makes a new low and get your all joking aside, though, thanks so much for your time. We'll get you back here soon.
No, thanks for having me. It's my pleasure.